So you're joining us on a crazy day, another wild ride here. We closed off the lows, but the Dow falling over 1,400 points. It has entered a bear market. It underperformed the S&P and the NASDAQ today, which their bull markets live to see another day. What'd you do today? Did you buy?
We were buying some stocks today. How we've dealt with dislocation historically is when you see such a quick, fast dislocation, you take the amount of cash that you want to put to work and you break it up into 5 or 10 different slugs. So since February 28th, actually the day before that Thursday when we had the flush on Friday, we've slowly started putting money to work. So if you take a look at companies like Pfizer, okay, so they're down 20% in the last couple of weeks. Are people going to use 20% less medication next year than they used last year? Is that going to be affected? Maybe in the short term. Another stock that we bought on Monday is Berkshire Hathaway. Berkshire's almost down 20%, and he's already told you where he's willing to buy back the stock, and he's got a ton of cash. So that's a pretty interesting thing to start to nibble on. And Wells Fargo, for instance, is down 42% in the last couple of weeks. So are they going to do 40% less loans next year with interest rates low? Assuming that there's a recession, because that's what everyone's afraid of today, you have 2 quarters of negative growth. So maybe there's an opportunity down the road. And a couple things. Number one, the last time they had a big bankers meeting, it was a phone call the day before Christmas Eve, December of 2018. Yep. So I wouldn't be surprised. You're going to get some fiscal stimulus. You had $3.6 billion in Italy in the last week. You're getting more. And what the market's grappling with is an inability to quantify this, and that can change overnight 2 ways. Go ahead if you have.
Well, I was just going to say, Tom, with picking some names like this, you're looking at Berkshire and Buffett's track record recently, I don't know, with Kraft Heinz and some other stuff, but I understand the argument there. Looking at Wells, which, maybe under the reasoning that it can only get better from here, maybe it could get worse first. Yep. But for the average person right now, and especially I think boomers are looking at what's happening and they're kind of freaking out.
That's
and,
sure.
Maybe they see people saying, oh, this is a buying opportunity, but what to buy? And, they're not trying to pick stocks, obviously. What would you say to people who just, could it get even worse from here? What's the guarantee that things will get better? And maybe it takes quite a few years for things to get better. And obviously they're freaking out about having a lot of money in stocks.
Yeah, I think, let's take a look at the worst possible scenario, which would just be devastating. What if you actually bought stocks in April of 2008, before bear went BK? Would that be, looking back, was that a terrible move to have bought companies like Pfizer, companies like Berkshire Hathaway, in that period beforehand? So if you have more than a 2-year time horizon, there may be opportunity, especially for these high-quality companies that have dramatically overshot. They're already starting to price close to the worst-case scenario, so they're a discounting mechanism. By the time they announce a recession, stocks will already be on the move on the upside. And as far as people getting aggressively negative here, God forbid you're short. I run a long short book, and you wake up in 5 days. They've got the phase 3 for remdesivir, the Gilead drug, going on, and they say, listen, we know it cured a few people anecdotally in Washington. We know it cured more than that in Russia and in China. So they come up and they say, whether it's late March, whether there was some talk today that we might get an early look. They've been saying early April, but we might get an early look. And they say, look, this works, we're going to approve it for informed consent use or compassionate care. And all of a sudden people say, wait a second, the odds of me getting this are so low. If I do get it, the mortality rate is low enough. If you're in the right age bracket, you have to take precaution. If you're not, I'm going to just go about my business, because worst case, I'll take the antiviral. And if it's Gilead, if it's AbbVie, we don't know. But that's something that could immediately quantify it, and the whole game was changed. Yep. And then you had the whole Russia thing over the weekend, and that blew up the credit markets. So it blew up in the sense that it rattled the credit markets. Credit spreads blew out. And that could get quantified. If you remember 2016, these things, they're always different, but they have similarities. OPEC balked on cuts, if you remember, in early 2016, and then they came back to the table, and that's when they got the rally. And you know who were the big buyers in 2009 when WTI went down to 33, and 2016 when it went down to 26? China stepped in and bought it at $30 a barrel.
Right.
We should be stepping in. We've got 100 million barrels of capacity in our strategic petroleum reserve. We could step in tomorrow, save 250,000 jobs in the oil patch, stabilize the credit markets, get OPEC back to the table, have time for this drug to come happen, and we could be off to the races. Yep. Or we could just focus on the problem and go lower. But we're nibbling on bargains.
Lots to think about in there.